15 minutes before the closing bell rings, it stocks to buy on the close. Buy on the close, up 163 points for the Dow Jones Industrials. The S&P up 22. The high of the session, the S&P was up 24. So we're climbing back up to that. We are coming off the worst quarter since 2011. That was the third quarter. Now in the fourth quarter, we've had day two of a crazy couple of days. And there may be more green in the future, though. Since 1995, the last 3 months of the year, here's a little history for you, have been notoriously bullish for the stock market. They often call it the Santa Claus rally, as you've heard, posting an average gain of about 5%, by far the best quarterly return of all four quarters, just about every year. Will we see the turnaround for the third quarter? And why not bring in two smart guys who are heavily invested in this? Tom Lydon is ETFtrends.com publisher and Global Trends Investment President, and Andy Brenner, National Alliance Securities Global Strategist and all-around genius on fixed income. Guys, the numbers are what they are. I'm talking about the jobs numbers. Now help us invest around it with these last few minutes of the last day of trade for the week. Andy Brenner, what do you think? Is there a great trade on a day like this?
Liz, I think the unemployment number today was pretty much clearly pointed out that the Fed will not be tightening anytime soon. I think you removed a huge uncertainty that the Fed had created on September 17th when they went to justify the decision by using China emerging markets. Now I think that uncertainty has been removed, and I think we're going to be off to the races between now and the end of the year.
Yesterday, I heard two people in the elevator in the building at Fox say, I'm going to 50% cash. Tom, is that a mistake? Because there's simply fear about the elections or China or the Federal Reserve, which are three formidable worries.
Well, they are, Liz, and you have to pick your spots. Looking at data today, there's more money coming out of emerging market mutual funds and ETFs than were coming out in 2008. So those types of concerns are real, and we have to look at them. In picking your spots, look to consumer discretionary right now. I mean, discretionary. You really have to look at areas where when people are cutting back a bit, and even though gas prices are lower, which is great, they're not spending as much money. And
hold on a second.
Come on short.
There's actually an ETF that you gave us that we should put up right now, which compiles a lot of consumer discretionary names. It's the XLY. And what names are in there, and why now when they weren't great performers in the last quarter?
Well, actually, consumer discretionary is the best performing sector in the last year, and also year to date. You've got Home Depot, you've got Amazon, you've got more people shopping online. You know, it's toothpaste, it's paper plates, it's beer, it's stuff for the kids where you're not necessarily traveling as much. So investors and Americans are watching their wallets very, very closely. Even though the employment numbers on the first look okay, the participation rate is the worst in 38 years, and I think we really have to look at the numbers.
We just blasted through the ceiling of the day. The Dow Jones Industrials was just up above 171 points. That was the earlier high of the session. Andy, you're a fixed income guy. We started to see yields plummet this morning on the 10-year Treasury below 2%. And you've got Carl Icahn putting out a YouTube video saying that high yields are a mess. Do you agree with Carl Icahn, and do you agree with people who are piling into Treasuries?
I do not agree with him, Liz. I think the 10-year Treasury got to 190 today, couldn't get through it. Yeah. I really think this is a time where you have to go after a lot of these distressed assets, like high yield, like emerging markets. They have really gotten reamed big time. And I think you're going to find yourself making more money by buying things at the low than going after Treasuries, which are already at the high. So I'm going to be a contrarian on this, and I'm going to go against the grain across the board.
That's what
Andy,
we like.
I'm with you. I'm absolutely with you here. But one thing we have to point out is the debt that emerging markets are taking on are just incredible. They've really enjoyed some good times. The debt to equity ratio is really getting out of control. If that could continue to spiral, where valuations even get better, but we might see some more downside.
$300 million to buy.
Okay, hold on one second. Art Cashin telling me $300 million to buy on the close. It's not a huge amount, but the fact is that means that the bulls are on the run here. I want to thank Tom and Andy for helping our viewers get some clarity on where you guys, at least with your expertise, feel there is money to be made, even with 9 minutes left to trade.